Sometimes it is necessary for a buyer or a borrower to obtain a hard money loan for a gas station or convenience store. The reasons can be numerous. Sometimes you need a quick close because you're buying it from an auction company and you have 30 days to close. Sometimes you need a quick loan because you've been declined elsewhere and you have a very short period of time to close a loan. Sometimes there's no financials and no ability to find out anything about the previous history of the property. Sometimes you need a private loan just to be able to construct a new property while you work on the takeout loan. As you already know, these hard money loans are strictly collateral loans. No value is given to goodwill, and many times the equipment will be discounted. On the low end, hard money lenders will lend about 50% against the collateral value. You'll probably get a higher advance with a bridge loan if there's a takeout loan than with a hard money loan. Usually a hard money loan will max out at about 65%. Years ago, financials weren't nearly as important as they are now. If financials are available, the majority of the private lenders are going to want to see what is available. If none are available, or the borrower does not own any other businesses or have additional collateral, they might reduce the loan to value. There are all types of hard money or private lenders, and we've used some unusual ones. I typically call some of these lenders money bags, which usually means it's just some wealthy individuals. Some of these lenders are lend-to-own lenders. You run behind on the payments and they're going to want the property. It's why some of them usually will not lend in states where it's more difficult to foreclose. The majority, though, will either be something like pooled investors, and certain states are much friendlier for this type of arrangement, or companies that might have a warehouse line with a bank or an insurance company. Some private lenders might have someone who is a fund manager that manages public pension funds. However the lender might be structured, there certainly aren't rigid requirements like there might be for being a bank and the possible regulatory issues with being an institutional lender. Hard money lenders usually want to lend money on gas stations in metropolitan areas and not so much in rural areas as a general rule. It is harder to get real value on a property in a rural area. Any area where you can get more comparable sales will be easier to be done because you can see how the market's trading. The appraisal process is different for many private lenders. Some hard money lenders will lend against the property, but the advance or the LTV will tend to be smaller, like 50 to 55%, but will be a quick closing. Some will do it with a broker price opinion, or BPO, and some will want it from a certified general, and some will want an appraisal from an MAI appraiser. They are almost always going to go with the real estate value only and no goodwill at all. Some hard money lenders will always want to make a site visit. If that's the case, they'll normally want some sort of a deposit to cover their costs to make the visit. Some lenders are now wanting an appraisal and a BPO to do a hard money loan. A lot of hard money lenders now will want a minimum amount of interest paid regardless of when the loan is paid off. Some lenders charge no prepay penalty even if it's paid off a month later. If you're doing a hard money loan for a gas station, your choices will be limited compared to more desirable commercial properties such as a multifamily. As you can imagine, conditions may exist such as COVID that adversely affect special use properties such as hotels, restaurants, and gas stations. That's why the maximum loan to value will be carved back because they're struggling more than other types of businesses. For purposes of being accurate, please consult the webpage to find the most current rates for a hard money loan for a gas station. Contact PetroMAC today to learn more.